Welcome to Built to Finish. I'm your host, Stephen Pivnik. Join me each week as we explore the journeys of audacious goal setters. This includes experienced founders, CEOs, and entrepreneurs sharing pivotal moments that propel their success. We'll also be talking with endurance athletes who push the limits of physical and mental ability. This show is brought to you by Acresis, offering tailored, high-impact advisory services to help founders get to their finish line with a strategic acquisition or majority investor recapitalization. Let's get started. Welcome to another episode of the Built to Finish podcast. I'm excited to be speaking with today's guest about his extensive experience in global market expansion and supply chain solutions. He is the founder of a company dedicated to guiding retail tech companies through the complexities of international markets. He is also a seasoned expert in strategic sales and client delivery, having previously held leadership roles at 4R Systems, Capgemini, and Accenture, where he managed large-scale transformation projects for Fortune 50 companies. He is the founder and managing director at Advance2 Global. Mark Garland, welcome to the show.
Okay, thank you, Steve. Appreciate the introduction.
Yeah, it's great to have you. So I remember when you and I chatted, you shared with me that you were the fifth CEO at 4R Systems. Is that correct?
Yes, yeah.
So can you tell me a little bit about the company and what led them to having so many CEOs at the helm?
Well, I mean, it's a company was 24 years old, and it went through. I mean, when I first joined, I was working for the third CEO, and then there was a at the end of the day there was a decision at the board level to make a switch out at the leadership level. So they brought in a seasoned veteran, a gentleman called Kevin Stadler, who I knew from previous roles, and he spent a lot of time in supply chain planning, assortment, retail, tech space, and done it many times with various exit strategies, etc. And so he took the helm. I worked with him for about 5 years, I think, and then there was a strategic decision from an acquisition perspective. We were doing very well as an organization, but what we didn't have was the magic ball, I guess, the crystal ball that told us that COVID was literally about to break out. So we made a strategic decision in October of 19. Then we went out searching for investment banker, really fantastic one to work with. Went through the process of putting the company out on sort of the for sale route. Got good interest. We whittled that down to about 3 organizations, went into a letter of intent, which was March 12th, 2020. And if most of you know where you probably were on that day, when we thought, this will be over in 3 or 4 weeks. Little did we know it was 3 or 4 years. Long story short, that we went into due diligence, and we were, obviously we had a number of clients that were essential, but a number of clients that weren't. So let's say that we were all in it together.
Sure.
So at the end of the day, what happened, unfortunately, that particular acquisition fell through. At the same time, the CEO then had already got an exit plan because he wasn't going to be part of that acquisition. So he kind of left us with an open position from a CEO perspective. So I don't know. I threw my hat in the ring on a Monday and got a phone call on the Friday, and realized on Saturday what I'd got myself into.
Be careful what you ask for, because you're up next, right?
No regrets. Absolutely no regrets whatsoever. But interesting way to get to the C-suite level. I was rookie CEO. I'll be honest with you.
Sure.
It's straight my first CEO officer position, and it's been a hell of a ride, but it's all worked out well in the end.
No, sounds like it. So you bring up a really good point, which is important for listeners to hear in terms of deals falling through. Obviously, there was a lot of extenuating circumstances around COVID and losing, key customers and things like that. But so many times, companies are marching towards an exit and they sometimes take their eye off the ball. How are you functioning? How is you and your leadership team functioning from an operational perspective while you were knee deep in due diligence with a potential sale around the corner?
Looking back at that particular situation, it was 100%, probably 110% focus on the deal. This is going to go through. And we all believed it. This is not pointing the finger at any individual. We as an executive team, we're also involved, as well as, the majority shareholder. And we all believed that the deal was going to go through, although it was extending beyond its initial term from a letter of intent perspective. We all believed that the deal would close. It didn't. And I think what certainly the learnings that I've taken away from that was, you've got to, continue to run the business. Number two, you've got to have a backup plan, and I don't believe at the time that because we believed so much it was going to go through, we felt that there was that we didn't really have that backup plan. All of a sudden, it's like the realization it didn't happen. Now we've got a situation where we probably should have made some adjustments to the organization accordingly based on our revenue and expenses. Because what I was faced with on day one was expenses from the acquisition. We got legal expenses to take care of, etc. I had to, and I hated to have to do this, but I literally had to right-size the organization. In essence, a third of the organization.
Oh, wow.
On day one of taking the position. And it never is, because you're dealing with people's livelihoods, and particularly in a situation with the pandemic, we were all, it's not easy to get out there, well, never as easy to get out there. But what I was grateful of, that everybody successfully landed new opportunities fairly quickly. And so, that's the important thing, is making sure that everyone's taken care of. But at the end of the day was, we got through that. And then it was a question of like, okay, let's get to the end of the year. Let's get all the expenses under control. We now know what our new revenue level is. Let's make sure that we're cash flow, neutral, etc. And the company itself, as I said, 24 years ago, then it was probably 20 years old. It was, we had to re-engage. How do we relaunch this company? How do we go back out to the market as a fresh 4R, and so I found a great company called Revenue Architects, who are, they don't just do the marketing side. What I thought was I needed was a new marketing agency. We worked with the company for 7 years, fantastic, did a great lot of work with us. But I think sometimes you've got to look at what else is out there in the market. So I went out for an RFP, spoke to 5 companies, and I was going down the route of, I need to look at this more from a marketing perspective. What's the message, etc. And this company, Revenue Architects, gave me what I asked for in terms of the response, but also gave me some additional information. And that was like, I want that. I.e., you've got to go back to basics. Who are your buyer personas? What is even down to the coloring of your website and the language of your website. And, what we were great. We provided these services. And so we had to turn it around of, well, let's look at the market back. What's the market telling us? And how do we answer those market questions, etc.? And so we spent about 3 or 4 months going through a whole workshop. And the premise was, treat us like we're a brand new company. We've just launched. All right, we've got established products, but how do we go to market? And so that's what we did in 2021. And then we had a whole marketing strategy, go-to-market strategy, and then they continued on with us throughout to really focus on helping us execute those ABM marketing campaigns, manage the website, build out additional content, white paper, digital assets, all that great work. And they became experts in supply chain planning.
You bring back some really good memories. When we were about 3 years away from our exit, we went through a radical transformation in terms of what all the processes, our go-to-market strategy, what we were selling, who we were selling to. And I remember calling us the 20-year-old startup, right? Because even though the company was 20 years old, we were operating just like a startup and doing a lot of the things that you just mentioned. So it sounds like we went through a pretty similar periods between our two firms.
Yeah, it's interesting because you think you know your buyers. I was at the time I'd been with the company probably 8-9 years, and I'd run sales, I'd run the delivery side of things, but it's not until you bring the experts in that can completely fresh eyes. They knew something about supply chain planning. They knew about supply chain, but not, they weren't industry veterans and they've not been in the business. But it's good for people to come in like that who are completely fresh, have no preconceived ideas. And it's like, sell it to me, tell me. And you've got to pitch it to them. And it's like, if they can't understand it, then who else is going to understand it? Because they're coming at it they're not a buyer, they're not in the business. I always say, if you can explain it, if I can explain what we do to my mom, no disrespect to my mom, but she doesn't, she's not, then she understands it, then I've got the message across. You've got to simplify it.
Yeah, 100%. I remember having to do the exact same thing. And we did sophisticated email migration and Active Directory integration projects. And somebody said, just dumb it down for me. So I said, you know what? We're a big email moving truck. You've got a house that contains all of your
Right.
email,
Yeah.
and you
Yeah.
want to move it to a new house. And you want all of those little email messages to be in the right rooms, in the right colors, in the right configurations. And that's what we do. And they're like, oh, thank you.
Yeah. Yeah. And that was the thing for us. It's like, well, we have this science and this algorithm, and it's like, people don't buy science. What do we fundamentally do? We make sure the
Right.
product's on the shelf at the right time when you as a customer goes in and makes that purchase. And if it's not there, you've lost revenue.
Yeah, you probably have as much terminology as I do around this, but I think people buy outcomes, right? So it's a lot easier to sell an outcome than the actual, features and functions and functionality of a solution.
Yeah. They want tangible results quickly with a
Hmm.
low cost of ownership. That was also the premise of kind of what I went back to with the 4R was, number one, it's got to demonstrate value. Number two, we're easy to work with. And number three, it's got to be affordable.
Right.
And those were the three kind of focus points of, I've got to make it affordable. I got to bring my expense levels down from the cost of the company and et cetera, to be able to go to market where I could go to a tier 3 at a significantly lower rate than I would do if I was going to a tier 1. And then the marketing obviously was showing the tangible value.
Yeah, sounds like you guys did that well and had a great outcome. So when it came time to bring the company to market from a sales perspective, the next time, the one that worked, what were what changed operationally internally? Like what strategies did you put forward to make sure you got the maximum outcome for all the stakeholders?
Well, I think at the end of the day was, we got the company from a right size perspective, from an employee perspective. We got a loyal customer base. We got a loyal employee base as well. And that was for me personally was the premise of, we need to now make sure we get through this acquisition.
Hmm.
Even though we made a lot of the changes, we weren't in a positive financial position. And we knew we had a certain length of runway, and not without getting into the specifics, but we had a certain length of runway. And so the focus then was, we've had some from previous opportunities for an acquisition, but this time we started beginning in 2024, re-engage. There was, we went back out to several that we'd had a conversation with in the past. And number one is we'd had some changes, i.e. we got, obviously structurally, we were under control from a employee perspective. We got a good customer base. We'd added 3 or 4 extra customers to the base, and we got a strengthening pipeline,
Okay.
which was key as well. And so that brought one of the companies back to the table, re-engaged, and therefore I think we got to a letter of intent in August, and then we went through the due diligence, and the deal closed at the end of September. And the important thing for me personally was make sure we got an employee base that have been loyal with us. We got some people that are like number 1 and actually number 2 on the employee list who've been with us for the entire duration. We got several that have been there with us, been with us 20 odd years. So they'd stuck at it. They'd seen it through the great times, the not so great times, but they'd stayed with us. And it's important to make sure we did the right thing for them. We did the right thing for the customers as well. That the company continued on and has now got a huge future opportunity, not for the employees, for the customers, but the solution itself as well as the company. And so, yeah, we got through that and closed that at the end of end of September 24.
Wow, so that was a relatively quick due diligence. A lot of due diligence. I think the average is 3 to 6 months. It sounds like you got through due diligence in 2 months' time.
I wanted it in 30 days. We agreed at 45 and we finished at 60.
Okay, it always goes just a little bit longer than that both parties agree to, right?
Technically, it popped into the Q4, which was beneficial for the buyer. So, and there was a lot of due diligence.
Sure.
And that's a process you've got to be prepared for. And it was fairly quick, but a lot of work. I mean, the long days, late nights, getting your documents
Sure.
together, but it worked. It worked perfect in the end.
Great. What landmines, if any, did you come across that you would advise people to look out for ahead of time during the due diligence process?
I think let's go back to due diligence. I think number one is I'm fairly organized, but I was ultra organized from a due diligence perspective.
Okay.
I.e., you get a spreadsheet that's got 250 rows of requested data from shareholder to contracts to trademarks, etc. So detail number one. So be very, very structured, making sure you've got all that together because it takes time to gather all that information together. The cap table, 24-year-old company, I will say we've done a good job at maintaining its accuracy.
Nice.
But when you go back through, I mean, they go back through 24 years of the cap table
Sure.
from its origination. So you've got to make sure, and we'd had a couple of board members who are no longer with us, shareholders no longer, pass on, and then it gets moved to an estate trust, etc. And then there were some other sort of transactions that happened prior to me, etc. But I would say, well, it's not necessarily a landmine, but just as a make sure you've got all of that information together before you
Mhm.
even get into a due diligence. Because if you don't, it can take time to get that because you're reliant upon sometimes external sources to gather that information.
Sure.
Also, I think we mentioned this when we had a previous conversation, that, buyers love asset deals, sellers love share stock deals.
Right.
And initially, we wanted a stock share deal.
Of course.
All right, well, show me your cap table. Oh, okay, we're doing an asset deal because you've got, even a small company can have a lot of shareholders, and there's requirements as part of that process, depending on which state you're registered in, etc. But it's a cleaner from a buyer
Yeah.
perspective to work on an asset deal. I'm now working through the dissolution of the legal entity as a result of that, but that's part of the process.
The largest takeaway would be the messier your cap table is, the less likely you are to get a stock deal, and the more likely the acquirer is going to force an asset deal, which is going to have
Yeah.
it's gonna be less tax advantageous to the seller. So please, whoever's listening, keep this in mind. Get your cap table as clean as humanly possible to maximize the chances of a stock deal.
How was your cap table? I was curious because I've seen ours and it was well maintained and it was just a lot of people.
Yeah, mine was relatively clean. I was the sole majority shareholder, and there was a whole
Okay.
bunch of stock option holders, and it was a really really clean stock option plan. So it was clear who the stock option holders were. But there were one or two previous shareholders, and even though the split was relatively clean, there was a couple of gaps in the paperwork which caused a landmine, literally like an 11th hour landmine, where I needed to
I
go.
had one of those where all of a sudden it's like I don't even know of this company.
Right.
And it ended up me doing thankfully we have all the documentation in the Microsoft environment. So wherever it is in the Microsoft ether, you can do a search on it and all of a sudden this popped up. It
Hmm.
was on some SharePoint site somewhere that I was able to find it quickly. But yeah, things like that. That's the sort of thing that if you don't have that in order, that's a landmine because it will trip you up. And that could have added another week to the due diligence process because technically, we would have had to go external to get information, but we had it. Thankfully, we were able to find it quickly.
The tiniest little ghosts in the entire cap table history are they will. It's not a matter of if they will surface; it's a matter of when. And
Yeah.
if they surface in the 11th hour, it's going to be the most emotionally damaging to the deal.
And it's the smallest little things. I'll give you another example. We'd leased some servers some years ago. They'd all been paid off, etc. And we got a letter of completion. But I don't know how they managed to do this, but their attorneys went through a process, and there was still technically there was still a lien on that hardware. So then I had to go, and you have to go then to I forget, maybe it was HP or one of the big your hardware providers, and so that there's a process to go through, and I'm like, I need this tomorrow. We're closing in 3 days.
Mm-hmm.
But
Yep.
it was literally, it's the smallest of things that you don't think about. Yeah, you cap table good, all the documentation from a contracts perspective, etc. But it was all that little bit of detail that could have tripped us up. I think we got through it because I was able to get it quickly. But it's just, I think sometimes you look at the bigger picture, but it's that smallest little bit of detail that could have tripped it up.
So, as from a integration planning perspective, how involved were you in the integration of your company being acquired by a larger organization, and what role were you going to play in the new company?
I think from the outset, I was very clear, and I think it was they were going to bring up the conversation anyway. But I said, look, I want to see this all the way through to the end, but I don't have a burning desire to be part of the acquisition team. Number one, I put 12 years of my time into the company. Number two is they don't need two CEOs. I mean, one's enough. And number three is I got other sort of plans for the future that I wanted to go and fulfill. And so they were like, I think it was almost like, oh, great, because that was a conversation we wanted to have with you. But I preempted that and brought that up and put it on the table. So all the way through, it was very much part of the whole process. And then obviously we got to closing, and the plan was that they will keep me around on a consulting basis to make sure we got a smooth transition for the employees, smooth transition for the customers, and we got some pipeline opportunities that I was sort of integrated into as well. And so we had an engagement agreement that I would provide any necessary transition support and sales support and connection support until the end of 24 now, I guess. But we got through that pretty much in the first 3 or 4 weeks and so they've been pretty much solo from this point forward. So, and I think that works well because it gave continuity to the employees and the customers. And then there was some transition because obviously with an asset deal, I'm in charge with kind of the dissolution of the current legal entity as well. So there was some overlap there where we needed to just work together. So that worked out fantastic. And they've, the company's taken over and they're running the operations and taking it to new heights.
No, that sounds like it was a great outcome. Sounds like you had a great, company culture. What were what advice would you give?
I think as much sometimes as you want to kind of keep this to a very, very small group, I made a conscious decision, not that I got into the details, but with most of the employees knew we were going through the process.
Okay,
And I brought several of the employees into the conversation. Number one is I had to do because they wanted to obviously speak with current customers, etc. But I think that
sure.
helped give them, because I needed them to, as a group, we were a small team, pretty integrated. I needed everybody to continue to run the business and focus on,
Mhm.
and feel like they've got a future and an opportunity to grow as part of the acquisition. And so therefore I brought most of the organization in very, very early on. So they knew that it was going on. I didn't necessarily bring them to the table in terms of all the conversations, but I kept them well informed. And obviously at the day we had issued the transaction, I basically had a conversation with all the employees. It was a very positive conversation. They were all very, very happy.
Okay.
And they're all happy, since the acquisition, because they've got a future. They're not thinking, if we don't bring that next deal in, am I going to have a job here? Being part of that acquisition, the company that acquired them is a huge organization that is a company for life. They acquire for life, and they've got fantastic structure and process and methodology, how they take these companies that, sometimes little distressed we were. And they strip it down, keep employees, and they've got a very well defined process, and they'll grow, and they can do everything that I wanted to do, but didn't have the opportunity to do it without the, additional investment that we needed.
Right. And sounds like a win-win situation.
Yeah, they can get the economies of scale as well, from a marketing perspective, because they can do it for multiple companies versus, we had, we were one company that was doing it for us. So
Sure.
the economies of scale. Yeah, the outcome was very, very good.
Sounds like the shareholders got what they wanted. They got a great outcome, and the employees got a fantastic employer to continue to work for. So sounds like it was a complete win-win.
Yeah, it was in the end, and it took some time. I will say, I go back to the sort of the thing that it reminds me, and some advice that I got from a great friend was, remember, it's not about you. I.e., at the end of the day, there's the feeling sometimes when companies sell and there's a transaction that there's a huge payout and the CEO can go off, retire, etc. This wasn't that situation.
Right.
And it truly wasn't. It was, because of the situation, the financial situation that we were in, and there were other people that needed to get taken care of from a pay perspective from the overall deal itself. So again, it goes back to I'm not doing it. It's not about you. The important thing is employees, the customers. Then then it's the shareholders, the board, and then you're last in that sort of hierarchy of needs. And because the staff, the old employees, as I said, had stuck with it. They've been loyal, and there were moments. I would say there were moments in sort of over the last 4 years that I kind of woke up and I don't know if I could do this, just because of the situation we were dealing with COVID and just the market, except for where we were financially. It's like, I don't know if I can do this. And it's like, no, I made a commitment. I want to see this through. And the important thing is for those reasons. And it worked out in the end. But I did have a backup plan.
It sounds like it definitely did. I mean, congratulations. I'm sure it was definitely a stressful ride, especially at the end, but you saw it through. And when you take care of all these other constituents, like you just mentioned, employees, customers, vendors, shareholders, then somehow, some way, karma is a beautiful thing, and you get taken care of at the end.
Yeah, I could sleep at night.
Yeah, 100%. That's super important. Before we move on to Advance2 Global, because I would love to spend a couple of minutes on learning, what that is and that company. What is like some last pieces of advice you would give to founders that have finally made the decision that, yes, it's time. I've been at this for 10, 15, maybe 20 years, like you have, myself included. What are some of the most important, things they need to put into place and additional decisions they need to make to really maximize the outcome for themselves and all of their stakeholders, like we just mentioned?
Surround yourself with really good advisors. Find a great investment banker. We did, and stayed with us throughout the 5 years. And sometimes was working with us without getting paid, or without potentially of even getting paid. They stuck with us. Number one is, they stuck with us. They knew the market, either knew the players, where the market was going, etc. They knew potential companies that would be interested in the company itself. So I think number one is find really good advisors. A great investment banker. We found a fantastic one. I go back to the advisors as well. Good legal that's responsive. We had, again, a great legal organizer firm that they'd worked with us for a long time. They knew where everything was. I'm not saying they knew where the landmines were, but they knew where to find documentation, etc. And then the thing to round that out from an advisory perspective would be, good financials. You got a good accountant. We were using an ex-employee who was our CFO consulting back to us, but we also had great accountants, good advisors, because you need that. I think those to me will be your three key players. I think number two is making sure you're very, very organized. I think went back to the due diligence. Don't underestimate due diligence. That is the piece that you can't control the timeline, but if you've got all your documentation and you're responsive and you're clear and you're transparent as well, it goes a long way, giving them a level of confidence that what they're acquiring is exactly what they're acquiring, and there's no what's and there's no surprises. And I think have a backup plan, because not every transaction is going to go through. You can get to a point, get to due diligence, and coin the old term, any sales cycle, the number one issue in a sales cycle is time. Well, you're still in a selling mode. You're still trying to sell the company. You want to do it as quickly as possible because something could change, and it will. You've got to be able to pivot quickly and be agile enough that if the deal doesn't happen, you've still got a business to run, and you can go and you can go back out to the market. So those are my good advisors. Surround yourself with great investment banker, financial and legal. Focus on, have a backup plan, and be very, very organized with I can't even say it, with your due diligence.
No, I couldn't agree more on all those fronts, especially the investment banking firm. You and I use the same firm. It was Fairmount Partners out of Slovenia. They're a fantastic firm. I love giving them a shout out just because of how satisfied I was from a perspective, and sounds like you were as well. And a term I like to use is always be closing. Always be closing usually refers to deals, like always be closing sales deals. But I like to say always be closing your books and always be ready for due diligence. Even though a deal may be 3 or 4 years away, you want to get yourself into you want to get the company into a process that has the best corporate governance possible so that that data room is always ready. Because a deal could be around the corner, even though you may not be actively shopping the company for a sale. There could be an inbound inquiry from a strategic acquirer that wants to go in, that makes you an offer you can't refuse. And if you have to start getting your ducks in a row, then you're going to lose a lot of credibility. So a lot of founders don't know what an information request looks like for due diligence. And if anybody listening wants to see an example of an information request, I've got several that I can share, but it's incredibly exhaustive. And sorry for the visual, but it's a proctology exam for your company.
And I think you'd make a very, very good point. The highest level of corporate governance would be well up there, because we did, and I was very, very fortunate. I got a great CFO, Kristen, who was meticulous. We got great legal counsel, and also accounting firm that we'd used well, we've been using for probably 15 years. And so the feedback was, you guys have very, very high level of governance, and they could see that. And to get that feedback was like, good. That's number one, is that we pride ourselves in that. And number two, it makes life so much easier.
All fantastic advice. So let's talk about Advance2 Global a little bit. Describe the company. What does it do? And share whatever you like to about it.
So I was, kind of an idea that I've been thinking about. You get to a certain stage of life. I had a great career. Well, I still have a great career, don't get me wrong. But I was like thinking, well, at some point, what do I want to do after 4? Or do I want to go and do another CEO engagement, or do I want to go back into an industry, consulting, etc.? And I kind of, the idea was, number one, is fortunate to have traveled a lot. Number two is, as part of travel, we've, from a business perspective, we've done a lot of work previously and more recently in Latin America, Europe, Asia Pacific. And I was like, you go to these locations, or you go to a conference. There was a conference in London, for instance, and you talk to some retail tech providers in the UK, say, oh, we'd love to get to the US, but we don't know where to start. It's 50 countries. Do we do the East Coast, West Coast? We don't have people there, et cetera, et cetera. And so the whole birth of the idea was, why don't I set up an entity called Advance2 Global and be that in-market expertise? Because coming into the US, for instance, coming into the UK, into the US, selling to the US is a different market.
Sure.
As is going from the UK to Asia, going from the US to Asia, it's a different culture, different selling process, different messages, etc. And so that was the birth of Advance2 Global.
Okay.
It's been a joy to sort of think through and set that up from the ground. It's an LLC. It's got a grand employee of one right now, which is me. But as we grow, I've got plans that we can bring other people on and sustain other folks to help grow the company. I'm 12 weeks into it. I've got two customers, one out of Chile and one out of India. We're going to New York next week to the National Retail Federation conference, and we're off to the races. And it's beyond my wildest dreams. It's nice to get up in the morning and yeah, it's I would say I don't. When I say I don't have grand plans, I mean if it continues on this growth, then it'll expand and we'll see where it goes. But I get up every morning. I'm having fun doing it, enjoy it. I'm reconnecting with a lot of folks that I haven't engaged with for a while. It's got a global perspective, which excites me. Ideal customer is either got some initial clients in the US, and I'm not just focusing in the US at the moment. It's just I'm based here, but I have a place in the UK, and we spend sort of split time between here and the UK. And so you got to start somewhere. So I'm looking here in the US, and I'll be in the UK in the summer. There's a big retail tech event in April, which I'll be attending, and hopefully that's a good sales opportunity out there as well. And a lot of companies that are trying to either establish into the US market, helping them with the marketing and the messaging. And then ultimately we're actually executing on the sales execution side. So developing a pipeline, going out to potential customers and really driving sales opportunities. And at the end of the day, if you don't have a customer here, you just need one. You just need one to get started, and make sure that one is referenceable, because it's always, well, you have customers here. Well, once you get one, you do. And from there, then, you can build on that one. And once you got established, then we can build an operation. And then ultimate goal is maybe they establish sales teams here in the US or the UK or wherever. And then I move on. But initially, I am that in-market local presence for them as part of what we offer with Advance2 Global.
No, I mean, I think you're providing a fantastic service for a need that is definitely out there. A lot of a lot of companies, myself included, tried with a lot of companies out there expand via trial and error. And that's definitely not the right approach, because there's so many people out there that have been there, done that, that can provide you, priceless advice on how to do it properly with a much greater chance of success.
We work with previously, not with Advance, but previously as past experience, a partner network is a great network. But every partner meeting is a good meeting. They've got to have skin in the game. There's got to be, some success reward to be absolutely engaged. And that's part of what I'm offering. And is, yes, I'm quite happy to work for a low retainer, but let's get that first deal. Let's get that first deal, and then we can share revenue together and reap the success. And that I think that's important. Yes, I'm partnering with them, but I'm also operating like I'm an employee of that company. I've got email address, I've got connection to their. So it's not like I'm going as Advance2 Global. I'm representing these two companies as though I'm working for them. And I think that's important.
I couldn't agree more. I couldn't agree more. I think it's going to be a huge success, and I'm sure you're having a lot of fun doing it. What is the best way for people to reach you?
So our website is nice and easy. Advance2Global.com.
Okay.
And then just put Mark at the front of that with an @ sign, Advance2Global.com. And I'll respond pretty much immediately. And love to have the conversation. Just to even just chat and have a conversation about the industry. And my background is obviously retail tech, but at some point I might expand outside of retail. But start with what you know. So focus in the retail tech spec. It's all out there on the website, Advance2Global.com.
Fantastic. We'll put that information in the show notes. Mark, thank you so much for being a guest on the show. You shared some great stories, some fantastic advice. Congratulations on your previous success, and best of luck to you with Advance2 Global. I know you'll do great.
Hey, Stephen, I appreciate it, and good luck to you. I know you've got a big expedition coming up in May as well. So I look forward to seeing you at some point soon for training, and then I won't be training with you. I'll watch you training.
I appreciate that. I'll be out to your neck of the woods in Colorado for some Mount Everest training in the next month or two. So we'll see each other face to face here soon enough.
I'm good with après ski as well. We'll take it there. How's that?
I love me some après ski. Right. Well, this has been another great episode of the Built to Finish podcast. Thank you all very much for watching and listening. If you've enjoyed this episode, please like and follow. If you found some information here valuable to others in your network, please share this episode with them. Thank you again very much for tuning in. Until next time. That's a wrap for this episode of Built to Finish. Thank you for tuning in. For show notes and more details, head over to podcast.stephenpivnik.com. Special thank you to our sponsor, Acresis, offering tailored, high-impact advisory services that help founders get to their finish line with a strategic acquisition or majority investor recapitalization. Catch you next week.